Under Armour is trading higher after the company's numbers beat expectations. Earnings did. Sales in the fourth quarter as well beat estimates. Joining us on the phone now, Nomura senior equity analyst Simeon Siegel. Simeon, it's great to talk to you. So we saw these numbers that are looking a little better here, margins expanding. Under Armour's been trying to turn things around. So is this going to be sustainable, or is this just an early step?
Hey guys, great to be on. Isn't this a great filler in between Hannity and the
Absolutely.
president conversation? We can talk about sneakers.
Why not?
Anyway, so listen, I think that this is really interesting, right? And the market is telling us now that this was a great report. Earlier today it was down. Before that it was up. The debate around what has clearly been a battleground stock appears to have gotten a little bit quieter. And I think ultimately the dichotomy and the driving force, or the most important question here, is what as an investor do you want? Because there's no question Under Armour is a strong brand. There's no question from its size that it's done and it's created this demand for its logo and for its technical product. The question is where we go from here. And I think that there is a sales aspect and there is a margin aspect. The stock is up because the company is now outlining a path to margin recovery. That is important and that's great, but the margins are at a 3. The question is ultimately, did they hit a peak? Did they hit a revenue ceiling in North America? And so far it looks like they have.
Yeah, and can they grow those margins? Because North America is still weak and their growth is coming from overseas. So won't the global slowdown make it even that much tougher for them to achieve?
Yeah, I think it's a great point. Listen, I think that there is white space. So the reality is they are fairly small internationally, so they can grow that number. But I think to exactly that point, let's look at what's growing. What's growing is international, apparel, at wholesale. That's a very different, that's not Nike, right? Nike is global, but also North America, direct channel, and footwear. So ultimately thinking through how big this business is and what we want to comp it against, I think is really interesting. So the global slowdown will impact obviously all the global apparel and footwear retailers and brands. I do think that let's give them credit where it's due. They're putting up really nice international numbers. However, I think it's important to note that's wholesale and apparel as well.
And let's talk about the strength of the brand for a second. I mean, as you point out, it is still dwarfed by Nike, by some of the other global shoe brands like Adidas as well. So what is the capacity of an Under Armour? Is it increasing? If it's mostly doing wholesale, is it increasing brand awareness, brand cachet? Is it cool enough, and can it be cool enough to continue to grow?
Yeah, it's an interesting way to think about it. The easy answer with someone with a reduced rating on is yes, it is cool enough. So I do acknowledge that and I do give them that. The reason I say that is ultimately there's a lot of math between what we look at and the numbers from the way the company reports it. But if we just oversimplify this company is doing over $5 billion in North America. And the reality is if you look at this from just ultimately an apparel versus a footwear business, their apparel businesses actually don't lag those leaders you mentioned by that much. They don't have a meaningful footwear business, so that's important, and that does carry. Footwear ultimately gives you this incredibly large audience. So my team and I had actually done a report. We did an analysis late last year that bottom line showed that every brand essentially peaks out at $3 billion if you sell through your own channel in North America and $5 billion if you sell out wholesale. So for all the negative commentary, I think, and there's a few companies in this bucket, I think that there's nothing wrong with Under Armour. I think it just did great things. I think it got too big. And I think that if we make an odd comparison, think about the handbag companies and Ralph Lauren, where they took a shrink to grow mentality and said, we're going to walk away from 20% of our business, and that's going to elevate our margins. To me, ultimately thinking through, is the business too large and could actually get healthier, smaller, rather than should I just grow ad infinitum?
All right, Simeon, good to talk to you as always. Nomura senior equity analyst Simeon Siegel.